All right, everyone, welcome to part 3 of the 10-part executive training series, which is volume-based analysis. I am Frank Ochoa, aka PivotBoss. I'm very excited to bring part 3 to you because volume-based analysis is one of the truest forms of seeing the live auction as it plays out. The auction market process is easily seen and probably the best seen through either market profiling or volume profiling. And I tend to lean toward volume profiling because I can understand it a little better. I can see things a lot clearer. It makes things much easier to spot when you're looking for areas of acceptance or rejection. And for all intents and purposes, volume-based analysis is really what allows us to execute our auction market theory, which again was part 1 of the course. So if you come up here to our blocks here, you can see that this is our PivotBoss method overview, and auction market theory was part 1. We did price-based analysis in part 2. Right now we're focusing on volume-based analysis, and really this volume-based analysis allows us to execute our auction market theory of being responsive buyers and sellers, being initiative buyers and sellers, and where to place our bets. And auction market theory tells us exactly what to do. We've already covered those sections. And now what we're going to do is we're going to use volume-based analysis in order to identify the proper areas where responsive buyers and sellers should be looking to engage the market, and the areas where initiative buyers and sellers should be looking to engage the market. And that's what we're going to talk about now. So let's go ahead and get started with part 3 of the executive training series, which is volume-based analysis. Here's the first cheat sheet that I want to show you. And we're going to cover some of these topics here on the cheat sheet, and then we're going to jump into the live charts. So I got 2 cheat sheets for you today. This is the volume-based analysis, and basically this one allows us to see, volume profiling allows us to see the auction process live and in its truest form via price and volume. And it's the primary form of analysis that we will use to execute our methodology of auction market theory. And a little bit about the profile here. This is just kind of a cheat sheet to get you used to seeing what these levels mean, what they are, the acronyms for them, because if I'm typing through the chat, I'm not going to write volume point of control, I'm going to write VPOC. If I'm writing about high volume nodes, I'm going to say HVN, or I'm going to write HVN. So this gives you a quick terminology cheat sheet so that you can see what each of these are. And a little about the profile. The volume profile, basically what it does is it organizes price and volume information using a bell curve, a normal distribution, which is also a Gaussian curve. And that's what this is right here. This is your normal bell curve right there. And what it's doing is it's looking at all the volume that traded at a specific price point. And then it's putting all the information on a curve, and it's distributing it on a normal distribution. And the volume traded at a price, you have to know, is independent of time, which is different than a normal chart. So for a normal chart, you know, here's your normal chart, and you have, here's price movement. Usually at the bottom of that chart, you have volume that looks like this. And it's telling you what the volume was on that day, or the volume was on that bar, or on that bar. And that's not as important as prices. So if you have prices here at 40, you have price here at 50, you have prices here at 30, you have prices here at 20. And then you start to see a curve here of all those prices, and you start to see a distribution of volume at those prices. You can tell which one has acceptance, which one has rejection. And that's really all the key things that you need to know about a market, is knowing where value is in the charts, and then where rejection and acceptance is in the charts. Once you know those things, it becomes very easy in order to identify what you should be doing as a trader that uses auction market theory, of course. So what the normal distribution allows us to do is basically it allows us to identify where value is when price is at value, and that would be the HVN, the top portion of that peak. That is value. That's where the most volume traded, right? And then, of course, this type of curve also tells us when price is outside of value So value would be this blue portion here whenever it's outside of that zone. And it also tells us when it's inside value. Value would be the entire area here. So that's the value area. So if we talk about the volume point of control, this is the highest volume that's generated at a single price point. So whichever price has the most volume traded, either for that day or that week, that month, whatever period of time that you're analyzing with volume profiling, the highest volume will be seen as the volume point of control. And this price is considered to be value among buyers and sellers. Value. It is fair priced. It's a fairly priced commodity. So this is value. If you have the most buyers and sellers coming to the market at a price point and they're logging the most volume, that point now becomes value that the market will now trade around. The value area, that's 68% of the volume that's generated is generated in this zone. So basically it's one standard deviation of value, of VPOC. So basically 68% of all volume trades within one standard deviation of VPOC. And that is the value area. So this is value right here. The value area is from here to here. That's where 68% comes from. 68% of the volume is generated in this zone. That is balanced, and that's the most accepted price range. That tells you that's fair pricing and there's acceptance, right? So that's acceptance. That's a balanced range. The value area high is the top of the value area, and prices above here are considered overvalued. The value area low is the bottom of the value area, and prices below here are considered undervalued. So basically this would be considered a value high or low. So it's on the edge of this range. So here, this way would be considered value area low. Here, this way would be value area high. Anytime you get outside that zone, you're going to start to see rejection, and that's where responsive participants bring it back to value. So we'll see this on actual charts here soon. So now you know what value is, the value area high, and the value area low. There's also now composite VPOC, micro composite VPOC, because this is the volume point of control of whatever set of data you're looking at. But composite VPOC, composite means that you're going to combine all of the available volume and price data to create a composite profile. So all of the volume and pricing data that's in the chart that you have, maybe you have 5 years of it or 10 years of it for whatever chart, a composite profile will build a volume profile using all of that available data. And then the price with the largest amount of volume traded in that data set is considered to be composite VPOC, CVPOC. So when I'm using a daily chart, that's what composite VPOC is. It's from the higher time frame. A micro composite VPOC basically combines all of the volume at price data from a user-defined subset to create a micro composite volume profile. So say you have all of this price action that's happened over time right here. A composite volume profile will have all of that information using that entire thing. Whereas a microcomposite profile may only look at this little piece right here to create a profile here, or look at this little piece here to create a profile here. So that's a microcomposite within the larger composite. So that's important to know your microcomposite value areas and values levels in addition to the composite, because you have to use them together in order to piece together the puzzle of where price is heading in a future period of time. So the HVN is the high volume node. The highest peaks in a volume profile are the high volume nodes, HVNs, and these highlight areas of acceptance in the chart. These should be considered your targets for the most part. So basically, this is a high volume node, this is acceptance, this is retail trading. So anytime price comes to a value area, you're likely going to see lots of volume trade in that zone, and you're going to see price stick in that area and trade. That's why you see a lot of volume generated in that zone. Meanwhile, you have the low volume nodes. Low volume node, LVN. The lowest valleys in a volume profile are the low volume nodes, LVNs, which highlight the areas of rejection in the price chart. These are your entries. A low volume node would be something that's out here, basically anything that's an outlier outside of value. And so when price gets out to here, this is when you get folks selling at the premium to bring it back to value. Or you get responsive buyers here basically buying this discount to return it to value here. And that's what you typically see. So basically, those are the key terminology, the key things that you need to know about the profile just in general, just to get you going. Now, the second cheat sheet here is all about identifying how to use the profile, the key things you need to know about it. And basically, this one's all about telling you how to use it to become a proper participant in the market. So our primary goal as traders is to identify value, first and foremost. Identify value in the chart you're trading, identify value in the higher and lower time frame. From there, once value, acceptance is identified, we focus on finding unfair price extremes, rejection. And then we look to return the market back to fair pricing, value, when the market falls out of balance. That's all we're doing, right? If the market has been trading mostly in this area all day long in a trading range, and then it dips its toe out to here, it's our job to take this and bring it back to here. And I'll tell you why when we get into the charts. That's just what we do. If this is the market here, this is the value area where most of the volume is traded, then this gives you a ready market of people ready to take your inventory off your hands, right? So if you buy something super cheap out here because nobody wants to buy a falling knife, but you did, you can take it back to the retail market and sell it for more. If something gets too overpriced here, you could sell it way up here and look to return it to value back to here because someone wants to buy it cheaper. So you have a ready-made market ready to buy your wares. Basically, you are wholesaling out here and you are giving it to retail here. That's what you're doing. So the goal again, fade unfair price extremes at rejection, at wholesale prices, and return price back to value, which is acceptance at retail prices. Now, if rejection at value occurs, then that implies that a price discovery phase to new or prior value will happen. And that's when you start to see shifting market sentiment and you start to see expansion to a new or previous value area. Now, about value, value is the most important part. You know, I call this the PivotBoss method, but I also call it the PVV method. PVV method, which is price, volume, and value. Price, volume, and value. And it really is all about those things. It's price and volume, and then it's using that information to identify where value is. Where is value? Once you know value, then you know when price is overvalued, then you know when price is undervalued, and then you know what you should be doing as a market participant. So the price where the most volume occurred is considered to be fair value among market participants. So value is the peak of the bell curve. Okay, that's the peak right here, the bell curve. 68% of prices are considered within value, within one standard deviation right here, from here to here. That's 68% of prices. 16% of prices are considered above value. That's going to be up here. 16% of prices are going to be considered below value. That's here. And then you have 5% of all prices fall outside of two standard deviations. These are the outliers. That's everything from here on. From here on. Those are your significant outlier events. And to me, that's kind of what we saw yesterday when I mentioned that we had a significant buying tail that developed in the ES and the NQ. I believe it's one of these outlier events. That's why I think that we can see a reversal here. So we'll see how that continues to play out. Now, this is your blueprint for how to engage this information. This is your blueprint. And your blueprint here basically says that auction market theory, if you are a responsive participant, auction market theory guides us to enter the market outside of value at a rejection level at wholesale pricing. And then we return it to value, which is acceptance and retail pricing. So according to auction market theory, if we are responsive participants, we are looking to defend back here and return it to value. Out here and return it to value. That's all that says, responsive participants. So a responsive buyer will buy in the bottom 16% of the profile at a discount and hand it off to retail in the upper 68% of the profile. If you're a seller, then you would sell in the top 16% of the profile at a premium and hand it off to the retail trader in the lower 68% of the profile. AMT, auction market theory, if you're an initiative participant, then this is the strategy. In this case, auction market theory tells us that price should push, if price pushes through a rejection point, the market is out of balance and has transitioned now to a price discovery phase. And this price discovery phase is just a trending phase where price is now seeking new or prior value. So again, that would be initiative. So what it looks like would be a buyer would buy above value in the upper 50% of the profile and look to hand it off at higher prices, perhaps at newly created value or at prior value. Initiative participants that are sellers would sell below value in the lower 50% of the profile and look to hand it off at lower prices, perhaps at the newly created value area or at a previous value area. So that's kind of the blueprint of what everything is. That kind of sums up what you should be doing in the market at all costs. And it makes it very simple. All right, so let's drop down into these charts here. Number one, let's just bring up a basic chart here. Let's just go with the NQ. Okay, so now we're down to a basic volume profile here. We have these key levels, okay? Now, a volume profile can look a lot of different ways across platforms. For the most part, you're going to see your bell curve here, and it could be on the right side, it could be on the left side. It doesn't matter where it is. What we're going to talk about is what makes every volume profile chart the same, which is they're all going to have a volume point of control, and it's going to be the longest point of volume in the entire profile. This one happens to be a 5-day profile, which means it's using the last 5 sessions of volume and price data to create a composite profile, a 5-day composite profile. The top up here, this little line, would be the top of the value area, and this would be the bottom of the value area, 4086. You can see how it's colored gray. So this gray portion here is 68%. So that's 68% of all of the volume that occurred over the last 5 days has occurred in this 100-point range from 4080 to 4180. And that can be said a lot from what we've seen here today. Okay, so that's 68% of the prices fall here. You got 16% of prices, right? 16% of prices. That's going to be everything that falls above this zone and below this zone. So you have 16% of prices above value, 16% below value. And then you have that last 5%, like 2.5 on each end, which is somewhere like here and somewhere a little bit higher. Like this little bit would be the last 5%, which falls way outside of deviation, okay? And that's why I said I think this could have been a significant event. Now, that's all the key areas, right? Now, if we're looking at composite profiles in a higher time frame, because this is an intraday frame, if we take this thing back out and we go to the NQ in a higher time frame, this large blue profile on the right, that is your composite. As a matter of fact, let's go to a clean chart here. And now we can see it even better. So here we'll take these off. And now all that's on this chart is that blue composite profile. This has 5 years of data from here to here. That's 5 years right there. And this is a 5-year profile, volume profile. This is what I would call the C profile, the composite profile. The highest volume in this profile is way down here at 1199 So this would be considered CVPOC. Okay, that's considered CVPOC. But you also have an HVN here. You have an HVN here. Those are high volume nodes. An HVN here. You know, all these little major points here, those are high volume nodes. Those are areas of acceptance. So while this might be the biggest area of acceptance in value, all of these are other areas of acceptance as well. I mean, look at how big this one got and how much trading we did in that zone here and then again here. So these are all areas of acceptance. These are areas where the market wants to do business. Fair price. They're fair pricing at that zone. And whenever you have fair prices, you get a lot more traders that come to the market. More buyers and sellers come to the market because the pricing is fair, so you trade in high volume. When the prices are unfair, you don't trade in much volume, you just see rejections. Unfair pricing, rejections. Unfair pricing, we're starting to see a rejection, right? And these happen near the low volume nodes. This shows you that nobody wants to trade there because there's a little bit of volume. Everyone wants to trade here because there's a lot of volume. So the basic strategy that we apply as traders is find out where the low volume rejection areas are, and that's where you should be looking to buy at wholesale pricing. And then you take it back to the high volume nodes because that's where you know you have a market of willing participants to take that off of your hand, right? Down here, nobody wants to buy. This is the wholesale. This is like the convenience store that's going to sell their wares. Not everybody wants to own a store to sell stuff. They just want to go to the convenience store to buy a pack of gum, right? Or whatever the case is. They don't want to actually sell it. But for the store owners who do want to sell, they get they get wholesale pricing, and then they can sell it for retail wherever they put that price point. And that's the same thing here. We're looking to come in here and buy with the smart money, and then we're looking to hand it off back to retail. And that was the same analysis that I gave back here in saying that I think we were going to come right back to here because this is where all the value was. This rejection here, that's why I said I thought we were coming back to here, and we did. Now this is the same type of analysis. So it's all about finding those areas of rejection in the price chart and the volume profile, and then as buyers, picking those off, buying them, and returning them to value. And that's why I mentioned in the slide, these are entries and these are targets. This would be a target. This would be an entry. If you're going to come onto an LVN from below, that would likely be a short entry for returning price back to here. So that's exactly how I see it right now in terms of the volume profile and how it helps you. All of the low volume nodes make things very, very easy to identify on the chart that that's rejection. The high volume nodes make it very easy to identify that there's value. But there's also value all over this chart. All over this chart. So if I come over here and draw, I can get this profile right here, this profile drawing tool, and I can come in here and I can draw a profile here. And what I would do, or what I do is I do everything that was inside at the beginning of that box. So I probably could even, it's probably from here, this bar, over to whenever expansion starts. So expansion starts here, so I cut it off on that bar. Because I want to get just that period of time where all that volume was and all that trading range. So I'm going to bring it here. That's my trading range, and then I'm going to bring it over one more because that's the price range where everything traded within. There you go. So now there it is, right? That's my micro composite. So this would be the composite profile over here with all of the 5 years of data. This would be a micro composite profile where I grab a subset of that and look to see where those key levels are here. Okay, so right here you see 2071 quarter. That's value, right? And then you see 2091, that's the top of value. And right here you see 2023, and that's the bottom of value, okay? And now what you see over here is if you right-click, well, I gotta right-click the chart, and then draw another profile, there's another range down here, right? So this range is somewhere that looks like this, like that. Okay, so you have this range here, and then you have the top of value here, the top of bottom of value here, and this is value. Okay, so now you have a microcomposite above and a microcomposite below. Okay, and then you also have value from back here, right? So this is how you start to build all these various composites and start to identify value in all the various micro time frames, so that you can basically identify what's happening in the ranges, what's happening at value. You know, when value went offered here, we knew it, and now price is likely dropping to a prior area of value. So we have to move back to farther back in the chart, and we have to see, okay, where are the areas of value down below? And then you start to create those micro composites to see where is price trying to get to, right? So whenever price formed this latest composite right here, and I mentioned that there was a higher low forming potentially here, the idea was to get it back to this previous point right there. Because if this is rejection down here, then price wants to get back to prior acceptance, and that's this. Remember, rejection, you want to trade from rejection to acceptance. Everyone wants to trade at acceptance. No one wants to trade at rejection. That's why there's rejection. And so your goal is to bring it back to value, and that's what happened here. And then it came up and then was happily traded in that zone. As you see, more value was created, shifted up just a hair, and then went offered. Once it went offered, it's clean and clear that you are at least headed back to this value with a shot to see a move back to the bottom of the overall range, because again, this is the top of the significant range and you failed to hold, so now that implies a move back to the bottom. So you see I basically used key range analysis there on my key range, and then I used volume-based analysis here to identify value and then give me targets on the way down, here, here, etc. So I blended a lot of different styles of analysis when I gave that research live, and then as I've been doing this research and analysis here, throughout the first portion of the year, we've seen it play out according to those rules. So a lot of times you won't always see my micro composites on the chart, because what I will do is I'll come in here, I'll plot it, and then I'll put, okay, this is MCVPOC, and then you'll see an MCVPOC over here. Or I'll say, okay, this is MCVPOC from here, and you'll see it over there. So I kind of transfer the information, and then I get rid of it because I don't like to clutter up the charts too much. So I just pop it off like that. So basically, that's how I kind of do the higher and lower time frame values. To be able to find value in any chart is very important. Knowing that the market was probably too heavy up here, the market was too long, it was too heavy, it needed to flush stops in order to try again, and then it got too heavy again, and now you're flushing stops again. And that's very important, and I saw all of that just by seeing a huge HVN at the top of all-time highs. You can't have value at the top of all-time highs. I mean, that was value. It's just that it was offered. It was easy for the pros to snatch that and take it back downward, and that's what happened in that instance. So being able to identify value in all time frames, being able to identify rejection in all time frames is very important. And then what you've seen here recently, like let's say the NQ, for example, I have 4072 is that little CLVN, 4072. So I mentioned before, if price gets into the zone, that's an area to buy for a shot at seeing a turnaround. And that would take us back to, what was it, 4340? So 4340 is the midpoint. That's what we think could happen based off of our analysis. And it's all because of this rejection point. Obviously, price pushed right through that area in the previous session, but the resulting rally and close back above it left a huge, significant buying tail. And now what that tells you is that all prices below that LVN were rejected, and now a retest of that zone becomes highly likely for a potential bounce. And that's what all of the analysis was yesterday and today. Let's see, if we drop into a lower time frame right now, you can see kind of the path of what happened here. throughout the session, and this is perfect. I mean, this is about as nice as you'll get. This is a perfectly balanced day. Nice 5-day profile here. Here's 40.87 half. Here's 41.81 half. Values are here at 41.34, and that's VPOC, and you can see it kind of shift back and forth, shifting around, right? All shifts that are important to know, but for the most part, VPOC is right in the center of the range. And whenever volume is right at the center of a range, it means that it's probably becoming balanced, and we could be looking at a nice trading range profile. And look, right here, it was perfect trading range market back and forth, and now we're starting to see a push up, because earlier I said, yes, it's a trading range market, but I think this thing is slanted towards the upside, and we're going to see a late day squeeze because I believe that this is an absorption signature on the higher time frame. I believe that swing OTF buyers are absorbing price points at that zone, and we could be looking at a big bounce here to come. So right now, when you look at this, you can just see the goal of a responsive buyer is to buy below value. So this is value, and this is the value low. So everything below this price is considered an awesome value. And that's why you can see it barely got to that zone a couple of times, and people were picking it off quickly and returning it to value. Once you return it to value, for all intents and purposes, your trade is done. Your trade is done. You've done your job. From there, you could manage to the top of value if you should get that zone. So we'll see how that goes. But boom, you can see all the various moves into that area are now overvalued. So this has been moving a little bit, but now anything up to that zone becomes an area that's overvalued, and usually you'll see participants bring it right back to the opposite side, with value at VPOC being the #1 target to reach to. But what I mentioned earlier, if there is a rejection at value, then that implies a price discovery phase to new value. So in this case, price went bid at VPOC and is continuing higher. If price can stay above value, that would imply a further price discovery phase to the next highest HVN above. And looking at this thing on a higher time frame here, we don't really have anything above here on a 5-day basis, and that's when you have to kind of go to the higher time frame, like this chart right here, to see what the next highest HVN is, and that's going to be 4280. 4280 is going to be the next highest HVN. So 4280 is going to be the next HVN up, and then 4340 is the midpoint of the range. I think that could be surefire targets of where we're headed to. So that's basically how volume-based analysis can really help you. This is a zone here where being able to see what's happening in the market leaves behind historical price points that show you rejection, it show you acceptance, and those are very, very important because they help you stay tuned to the right side of the market. Thank you very much for joining me for part 3 of the volume-based analysis, which is part of the 10-part executive training series. That was a quick intro to volume profiling, how it can be used in your trading, what the key ideas you're supposed to take from this training was mostly what value is, how is it calculated, and where are the opportunities to get into a market, using rejection levels, using areas of acceptance for targets. Just fantastic the way it all comes together. And when you blend the volume profiling, the volume-based analysis with all the other concepts that we teach, it really makes for a very robust trading approach to the market. So I hope you enjoyed this course, and we got more parts of the executive training series to come. Thank you very much, and I'll see you soon.